Good morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, July 7th. Greece again, still in the headlines, guys, and we are gyrating back and forth, really going nowhere. You can see a 10-minute chart here for the last 4 trading days. We have gone at the lows just above 205.5, back up to 208, and that's exactly what we're doing. Gap up, gap downs, pretty much one move during the day, and then we get a little bit of a sell-off or a little bit of short covering rally. So really not much of anything has transpired in the last week. Aside from 2 Sundays, we had about the Greece referendum, and then we had previously a decision in Greece 2 Sundays when we had the big gap down, and then the markets rallied us Sunday night into Monday morning, and then that was pretty much it. So that was also subdued as well if you weren't trading Sunday in the afternoon, which many people do not. However, now let's take a look at what we have for this week. We still have Greece again in the headlines. I think the next 24 to 48 hours is either going to let them default and then discuss about kicking Greece out of the Eurozone. I really don't think that's going to happen. However, there should be some sort of a deal. It's quite embarrassing to see, large officials such as the ECB, the IMF, still don't have this at hand, and it's just embarrassing to say the least that they're letting this gyrate back and forth and not really just grabbing hold of the situation and making this thing whole. So unfortunately, this is what we're dealing with for the next couple of days. Now, I do suspect that we get a deal and that we at least rally here. See, here's what my scenario is and what I've been thinking. I've been mentioning this to quite a few times. Yeah, there's a lot of shorts looking to short the market, and I think that this is a great catalyst, obviously, to short the market. But eventually, there's going to be a deal made. Greece can't pay their debt, and they're either going to let them default, and we get a little shockwave into the marketplace the next few days, and then we rally. That's really what I'm thinking about, rallying into that seasonal strength for the first couple of weeks of July. So whether we sell off the next few days, at least this week, and then next week we start to tick back up again, and then get another sell-off. Now, that might not happen. We just get that sell-off, and we don't get that strength that we're looking for, and then we kind of gradually grind higher into September or even October-ish, and really look for that correction. Remember, we want to see – there's a lot of variables here in marking a top. First of all, I've been mentioning this for quite some time. Those of you who follow the videos, I always said that China is a big canary in a coal mine here, and I do think that is going to ultimately take this market down. Greece is, I think half of Los Angeles' GDP, very small country. So I think that's just right now in the cards. But China continues to sell off, sold off last night yet again. Government trying to get a hold and get a grasp of what's happening. They continue to put in stimulus to try to hold the market, and it's not happening. So I think that's going to be the big culprit here, guys. If Greece does somehow they come up with an agreement, I still think the market eventually will at least short-term sell off. And again, that's what I'm looking for. But I would have liked to see more of a rally first, then a sell-off to get everybody short, and then that last-ditch euphoric long push higher and get that capitulatory high. That's when I feel the market will actually top. And I do feel that it should top sometime this year. Market hasn't gone anywhere for the last 7 months. We've been in a massive trading range for 6 months. And I think now is time. Volatility is starting to pick up, and I do think it's going to be a spectacular fourth quarter. And I really do think so. Now, we're going to get some chop going into the third quarter, obviously, through the summer. But once the third quarter is over, I think we should get a really good end of third quarter to the fourth quarter. 4.5 months should be really great trading, because what happens is the market just can't hold itself much longer for 5-6 months in a trading range and not do anything. Now, it could happen, obviously, but I would suspect something. I would suspect something different. So we'll see. Let's keep an eye on things. Let's keep it really short term. Let's take it one day at a time and really let the market tell us what to do. But that's what I'm looking at right now. Hopefully that we get a little bit of a market sell-off and then a rally, and then we start to sell off again going into the end of July. And then we gradually move higher in August into September. All right, so you see that 10-minute chart here. Here's a couple of things that I've showed you before. Here's the XLI 60-minute industrials. Makes up about 25-30% of the S&P. Head and shoulders pattern that which broke. The target's going to be right in here in this area, right around 53 and a quarter. So we still got a little bit of room to the downside. When this is weak, this is also going to help the bearish case in stock. So I just want to let you guys know what's happening here, and maybe you might want to also keep an eye on things. Yesterday we had a down day, but we actually took well off the lows, as you can see here, and that's just really making a bear case here. And this is the XLF, guys. Now, this is what's also a little bit disturbing here is that we broke out, but we really didn't go anywhere. We haven't gone anywhere all year. You could see that. So the banks are not rallying, and that's something that's a big concern as well. Now, remember, tech is getting killed as well because of what's happening in China. You have a big sell-off in China. Technology stocks are definitely gonna get hurt by that sell-off as well. Here's the spiders. You can see here another bear flag. You know, just there you go, another little bear flag here. Broke down from the bear flag. We back tested it, and now we should be looking to go a little. Well, we're up a little bit in the pre-market, but we're starting to sell off ever so slightly. So let's see what happens here. And if these gains can hold on basically these possible talks that the agreement has been reached, we'll see. And then we really want to see what the market does. But spiders, again, just barely got back above the 200. Not looking so pretty, right? We're down below this massive consolidation, this lower trend line support here of this ascending triangle actually broke to the downside, and we have a few days below that. So that's not a good sign. It would need to really get back above, clear this level here, support. Of resistance, and really get back into the channel and start to break higher. Has a lot of work to do and a lot of proving to do too. At least the bulls have to. Here we go with the IWM. You can see again starting to break down. It has not touched the 200, which is good. But again, this leader that's been leading pretty much all year is now starting to break down. Remember what I said. IWM usually tops before the general market does. Okay, it happened in 2000, happened in 2009. So watch the Russell. Russell here plays a big role in determining market tops and bottoms. Okay, IYT. Now I'm showing you the weekly chart because I want to show you how really bad this is. And again, this is a big factor with China as well. Back from October 2012, look at this big, massive move up. Never really broke this line and the 50. Now look what's happening. Now it's starting to roll over here. China topped when transports topped right around here if you looked at the chart, and now we're starting to break down again. This is not a good sign, guys. And I kept on saying that eventually these money managers are going to see, wait a minute, this is not good. Something's going on here in the economy. We need to pay attention. So exactly what had happened. Now we're making lower lows and lower highs. We still haven't recovered. Again, this is going to be the ultimate target here. Then we would reevaluate. Okay, we have the diamonds. Same thing, a little bit of a back test here off this little flag pattern. First low is going to be right around here, 171 and a half, call it. That's going to be that downside target in the diamonds. And then lastly is the Qs. Now the Qs is holding up pretty well, but watch Apple because Apple is a major component in the S&P and a lot of different ETFs. A break below 124 and hold, I think you're going to also get some big pressure in Apple itself. So we need to really, really, really pay attention to this. Okay, so that's going to be a really big indicator as well by watching what technology does and the major components in technology such as Apple. Hope it helps, guys. Let's see what happens here. I'm really looking for love to see a nice big pop up and then fail, and then that would give us get us down to that, you know, that third week of July. Maybe we sell off and we kind of bottom a little bit, and then when there's nobody around, usually the path of least resistance in the marketplace is higher. Market drifts higher into August, September, and then we get that correction phase that we're looking for. So that's what I'm looking for right now. Obviously, things do change, but I will always keep you abreast of what's going on here. So today, let's see what happens with the Greek situation, and if they do get some sort of some sort of a bailout or some sort of a deal. Let's see how the markets react to that. I kind of think that you're not going to get much reaction. You might get a little bit of a push lower if it doesn't happen, or a big push higher. But I do think that after that, the next step is going to be watching what China does. Have a great day, everybody. We'll speak to you tomorrow. Take care.